What's up guys, my name is Natalie. Welcome to my channel. Today I'm gonna talk to you about what Bitcoin did since yesterday. Did it come to our Fibonacci level or did it not? Is it might just at a very strong support right now and it will continue to the upside if it breaks the previous lower high that we're having? And I also want to talk to you about how important it is for you to be able to control your emotions while trading. Continue watching this video and we see you after this. Let's go straight into the market because that's why we are here. So yesterday I did put up this Fibonacci level that we had. I always have my higher time frames on the left side and the lower time frames on the right side. So we could see that the market did spike up into the level that we had, and right now it's above the Fibonacci level. So you have the 50 and the 61 that I'm focusing on. But we are still respecting the trend line that we do have around here. And if the market will continue to the upside, we want the market to break this lower high. Because when the market is breaking a downtrend, we have to break the previous lower high for the market to become a high, go back down to create a higher low because it's higher than the previous higher low, make another higher high because it's higher than the previous higher high, and so on and so on. So if you want to be sure to buy the market, we want the market to break to the upside, create a high, come back down, create a higher low, because as I told you, the market is higher than the previous low and then slowly continuing up. So right now we just have to wait and see if the market's still gonna respect this trend line that we do have. And you can see a very huge spike that we have on the 15 minutes. And if the market will continue down, this is a perfect area to sell the market. But if you want to be sure, we have the zones, and the zones are the ones that need to be broken, and then we sell or we buy. And we at this area right here, we have Fibonacci level that we're having. So if we want to be sure to sell the market, we definitely need the market to break to the downside, create a pullback into the 61 area that we're having. The market also do respect the previous sessions that we had here. It did respect the low of New York for a couple of, was it 24th of August? So if the market breaks to the downside, it can also come back in here because this is the Fibonacci level. So it usually comes back in and respect it inside of it and then break to the downside. But if we see on the higher time frames, we are also at you have to look at the higher time frames, and you can also see that we do respect this resistance here turning into support. So the market could definitely just have made a pullback right now, and then it will break to the upside. And if you want to be sure, if you don't want to wait for the market to come to break it like that, you could definitely use the Fibonacci. This is why I love Fibonacci, because you can definitely use it and see how price reacts to it. So if the market does come down again, creates a higher low because it's higher than this previous low, that lower low that we do have, we could definitely see the market going up. Why? Because of the overall picture, we are still in an uptrend, and the market did react to the support that we had here, the previous support. You see, this was the support. The market was above it the whole time. The market reacts to it as a resistance, but the overall picture, we are in a uptrend. So the market just because you can see if you're taking the Fibonacci right now, and take all of these away, because I hate to have a lot of things on my chart. But look at this. If you're taking the Fibonacci from the low to the high on the daily, we could definitely see that the market reacts to it. It's so perfect. And then you break it down to the lower time frames and you look at this. The market respects it so much. You have 1, 2, 3, 4, 5 dojis here that respects it, and they also respect the previous resistance that we had. And now if it breaks this lower high, we are definitely going up again. And then we are looking to find our entries on the lower time frames around here, and our TP could definitely be, let's see, if you're taking a entry around here, you could definitely take the TP around here, because that's the next zone that we're having. If the market breaks to the upside, slowly goes up. This is going to be the next zone. Why? Because this is the previous resistance that we had. Everything else in between, the market just spiked down. It just continued down. But this is where we have the rejection. So this is the next zone that we are focusing on. So if we are finding a entry around here and the market is going up, you can have your TP around here. You can definitely have other TPs, if you don't want to wait for that long. But this is, I do believe that if the market breaks, the market have to go up to this zone. And when the market comes to that zone, as I always tell you, the market will react to it and might continue to the downside and then slowly go up again. Because that's what the market does all the time. If the market goes up, goes down, goes up, goes down, goes sideways, goes up, goes down, goes down, goes down. That's everything that the market is doing. The only thing the market is doing is 3 things: sideways, goes up, or it goes down. And because we do see that the market is on its way up, right? So we are not expecting the market right now to just slam to the downside. Nope. The market has to break this zone, retest, break the next zone, retest. But this is what the market has to do, because right where the market is right now, the market can continue to the downside again. I told you this in the last video. The market can come down here and it's still a uptrend, because the market never broke the previous higher low that we're having around here. The market has to break it, and the market could come down here too and then slowly go. As I told you before, the market is never going to be perfect. When you're searching on market structure, obviously this is how it looks, right? You have the low, you have the higher high, you have the higher low, higher high, higher low, higher high, higher low, higher high. Well, this looks perfect because you have a low, you have a higher high, higher low, higher high, higher low. Well, it doesn't always look like that, because if you're looking at this, like, what the hell is going on around here? Well, the market's going sideways, but it's still doing higher high, higher low, higher high, low, lower high. But we can still trade inside of this. Because when you are on the higher time frames, yeah, this is the daily. But if you go to the lower time frames, you have small uptrends and downtrends the whole time. And those are the ones that we are taking our profits from. Because if you're always going and looking at the daily, you will never be able, well, you can do it, but it's going to take forever for you to earn money on it. This is the whole picture. We're breaking everything down to smaller pieces every time. And sometimes you can even take the entry of your entry on the 3 minutes, but you only do that when you're understanding the higher time frames. A little recap on Bitcoin right now. If the market does react to the Fibonacci level again, I do believe the market will continue to the upside. If it doesn't and break the Fibonacci and breaks up, retest the previous lower high that we're having, we're selling, definitely. Using the lower time frames, we can have a entry around here. If you see that the market does respect it, you'll have your entry around here. If the market breaks to the downside, continues up, and you can see where this is on the higher time frames, like this. So this is where you're going to have your entry. If we are using this zone that we're having right here, this is your entry is going to be around here if you're looking at the higher time frames. Smaller time frames, higher time frames. If the market breaks this zone right here, comes back up, retest it, looks like something like this. If the market does come back down here and retest it from the upside, so we see that, okay, it's doing dojis around this area and it doesn't want to break this zone, you can definitely buy the market. And if it comes down again, two touches, respect the previous low that we're having and close above, we can buy the market. If you want to be safe, you're waiting for the market to break this zone, comes back up, buy the market. Because the zones are, as I told you, very important. And you can see now that we are on the higher time frames, we have some, right now we're just waiting for the market to break this high, this lower high, or it's going to break this lower low. We don't want to gamble. Okay? It has to look something like this if you want to be really sure about what you're doing. Patience is key. Patience is key, 100%. Always have to have patience. Wait for the markets. Create a system. Follow the system. Never break the system, because that's when you're gonna lose your money. It's when you're starting to gamble because, okay, I don't have the time to wait. I think the market will do this, and from nowhere the market is doing the opposite of what you thought. And if you just waited 5 minutes more, you could have been in profit. And profit doesn't mean that you're inside of the trade and earning your money. You're also saving your account, that you're not jumping into the market, you're waiting. So the market, you're not losing money, you're not gaining money, but you're not losing money. That's the difference. Don't just go into your trades based on that you don't have the patience to wait for it. I know it's hard, and that's something that you really need to understand, how your brain works when you're trading. When you start to understand how it works, how emotions comes into the game. When you're trading, you have to understand yourself. I am not the same as you. I was very greedy in the beginning when I started trading because I really wanted the money. But then I understood that I'm never ever going to be able to have my money if I'm always greedy. I want more and more. I'm not trading then. I'm just throwing my money away. You need to have the knowledge about the charts, the price action, the market structure. You need to understand that. When you understand that, there's no room for you to gamble that knowledge away, for you to be greedy because you want more. Because right now you're not thinking about the money, you're thinking about how does the market react to. It's just a puzzle. Trading is a puzzle, and you need to figure it out. You need to combine all of these things. I see the market in one way, you see the market in another way. You really need to take your time with this. It's not easy, but it's so worth it. I'm telling you, it's worth the pain, because trading is pain. Trading is pain. I'm serious about that. Okay, so thank you for today. Tomorrow I'm gonna go through Ethereum together with you, and we'll see if the market did break to the upside or to the downside. Please like this video, share it with your friends, subscribe, and we can go through the markets together. Bye. Have a great day. Have a great weekend. My name is Natalie. Bye.